Hey everyone, in this video I'll be talking about rents. If you're an investor, which cities are getting the best rent? Where can you make the most positive cash flow, passive income? And unfortunately, if you're a renter, which are the areas, which cities are going to be not the best to live in because rents are going to go up or they're continuing to go up from this point onwards. So look, really, if you're an investor, stick around till the end. This will give you a really good understand, city by city, where you should be thinking about investing your hard-earned money in, right? And my name's PK, and I help people build passive income through property investment using data without needing a $15,000 buyer's agent. And this channel exists to help you guys get ahead in Australian real estate. So if you're trying to get ahead in Australian real estate, then hit the subscribe button right now, hit the notification bell, give it a thumbs up, give it a like. And I'm sure, and I'm so privileged, and I'm so grateful that you'll get value out of this community. It's such a fantastic community. Thank you for being here. So let's get into it. You can see already sharing my screen. So a couple of graphs, or 3 or 4 graphs that I'll take you through in the next 5-6 minutes. So annual change in rents is a little bit difficult to see, but if you kind of look in a little bit, you'll be able to make this out. So you can see here that in Melbourne, rents haven't really been rising. This chart starts at 2016, comes forward 5 years to this year. I mean, Melbourne, from an income story, hasn't really gone up. If you held properties, if you had properties in Melbourne, you aren't really making more passive income because of rents going up, right? You might have paid them down or whatever, but just looking at rents, it's not been the greatest opportunity. And the same thing as Sydney. Sydney's this black one, as you can see here. Actually, it went downwards. So 2018, 19, maybe a little bit 20, rents were actually dropping. So that does not make for great property investing. Whereas if you look at a place like Perth, I'm not saying that you should rush out and buy in Perth, with a blindfold on, markets within all these cities, but you can see that rents have really started to go up 20%. Oftentimes, not always, rents, when they rise, it's a precursor to property prices rising. I'm not saying that's necessarily going to happen with Perth. We'll talk about that in videos to come. But you can see that genesis is definitely happening. Same with Hobart. Hobart is this orange one. Rents went up. They continued to go up, but the rate of increase slowed down, and then they went up again. So basically this whole time, Hobart has been rising pretty well. Brisbane, mostly in the last 1 or 2 years. Same with Canberra and Adelaide. So, you could say the takeaway from this chart is really to say, in Sydney and Melbourne, those have really been the big underperformers in terms of rental growth. We want rental growth as property investors because with rental growth comes the ability for our borrowing capacity to increase. People always think, I've maxed out my borrowing capacity, can't buy more properties. Well, that's because you may have bought properties where the rents haven't really materially gone up. You need capital growth, and so you also need rental growth. That increases our income. Every $10,000 of rent increase is actually viewed more favorably by banks than $10,000 pay rise. Okay, get that point. When rents rise, they matter more in the bank's eyes in terms of your borrowing capacity than when your PAYG or your business income rises. Really important point. And so you would have done well from a borrowing capacity perspective in Brisbane, Hobart, Perth, Adelaide, etc. And annual change in rents in terms of units. So these were all houses. In terms of units, you can really see, the classic mistake that people make is, buy an apartment in Sydney and Melbourne because they think, these are the big cities. Apartment close to the city, you can't go wrong, but these make for oftentimes the worst investment decisions. Right now, rents have started to go up for Sydney. You can see Melbourne a little bit, well, not really. That decline has reversed itself, but if you just look at that red chart, it's red line, it hasn't been terribly great for Melbourne, nor has it been great for Sydney. It's been negative this whole time. Even Canberra, this dark purple line has been okay, not as good as its counterpart here in houses. Adelaide, the light purple line, a little bit hard to see. Hobart has been better, Perth has been better, but you can see here that, I've done so many videos on why you should buy, predominantly speaking, houses over units. I've talked about capital growth, on how on average, there's always exceptions, on average units underperform. In rent rises too, they underperform. So takeaway is buy a house, not a unit, and try to buy something that's outside of Melbourne and Sydney if you value rents rising, if you value your borrowing capacity rising, if you value the fact that your passive income or positive cash flow will rise. If passive income is why you're in the game, then maybe Melbourne, Sydney aren't for you. All right. And then here's another chart that kind of just backs up this point a little bit more. And by the way, I forgot to mention, these are all CoreLogic data. Gross rental yields dwelling. So gross just means gross. It's pre-expenses, okay? So expenses are like council rates, maintenance fees, vacancy if there's any vacancy, all that kind of good stuff, right? And here are gross rates. So once again, to kind of slam dunk, hit the nail in the coffin, if you're buying a property in Sydney with a gross yield of 2.5 net, it's going to cost you, like $1 million house, $1.5 million house in Sydney. It's going to cost you $20,000 to hold, per year. So, that's not really why we invest in properties. We don't buy properties to lose money only then to get some of that back in tax. That's not why we do that. Similar story in Brisbane, in Melbourne. Brisbane's slightly better. I've just done a video 2 days ago on why, from a demand perspective, Brisbane, Adelaide, Perth are the ones show the most healthy signs of an imminent boom, or that boom increasing, or that's longevity stretching out. Adelaide once again, Brisbane once again, Perth once again, outperforming Sydney, Melbourne in terms of yield. So once again, why buy a property that's going to cost you money to hold? I don't care what any property investment company says, unless you're earning $500,000 a year, unless you're earning $1 million a year in your income, buy positive cash flow properties. Entirely possible, Brisbane, Adelaide, Perth. Now, you're probably thinking, hey, PK, even with a gross rental yield of 4.3%, that's not really positive cash flow. Well, that's a good point. Markets within markets, suburbs within suburbs. So in Brisbane, the majority of Brisbane is not positive cash flow, but there's still many suburbs that are. Even more so in Adelaide and even more so in Perth. So in Adelaide, Brisbane and Perth, you can still get suburbs that give you yield of 5, 6, 7%, which can't be said of Melbourne and Sydney. Darwin's huge, but capital growth story, check out my last video. Demand isn't looking crash hot. And Canberra, demand is looking crash hot, but once again, you've got this 3.9%, which isn't super. And the thing with Canberra or ACT in general, you have to pay huge megabucks for land tax. You buy a property there, you got to pay so much to the state government every single year just for the privilege of owning land, which takes us 3.9 all the way down to sort of 2.5 or 2.9 if you compare it apples with apples versus these other charts here. And so, once again, right? I mean, Sydney and Melbourne underperform. If you're looking regional, which I do encourage you to, Queensland, regional SA, regional WA, and regional Northern Territory are giving the best rents. I can tell you where we're investing in is not regional Northern Territory, is not regional WA, because we want rents plus growth. And that growth story really isn't there for regional WA NT. It's mostly regional Vic, Queensland, and SA that we've been doing a lot of investing in, apart from those other 3 capital cities that I've mentioned before. So I'll just leave it at that, guys. That was just an overview of rents, where to focus your money, where to focus your investing decisions. We want rent. We want rent to go up. We want that borrowing capacity to go up. We want that passive income to go up. We don't want property investing to affect our lifestyle, and we don't want vacancy rates. These are some great metrics from CoreLogic. Guys, if you want to get ahead through property investment, I'll leave some links below to my podcast, to the private Facebook group that you can join, private, 10,000 people in there, step up your learning, and also my website if you really want to take it to the next level. Always remember, the most important real estate, the 6 inches between your 2 ears. Hit the subscribe button, many more videos to come. Catch you later, guys.